Yeah. After now we have discussed about the poem concept, right? That is applicable for non-resident. Now we will go discuss about section that is scope of total income. So section 7 deals with scope of total income. Here scope of total income includes income deemed to be received, income deemed to be accrue or arises in India, income accrues or arises in India, deemed to accrue or arises in India, and income received in India, deemed to received in India. This is included in the scope of total income. Now we will go to section 9. Section 9 deals with income accrue or arises in India, deemed to accrue or arises in India in respect of different categories of income. Income deemed to accrue, the income accrue or arises in India, deemed to accrue or arises in India in respect of three categories. First one is business connection in India. Second one is Second one is any asset or any income source or any asset or any property or any income source are situated in India, and third one is due to transfer of capital asset located in India. Out of these transactions, any income that is accrue or arises in India, deemed to accrue or arises in India and received in India, then it will be considered, it will be included in scope of total income. So here it will be taxable. So here the first we'll talk about first transaction. First transaction is what? First transaction is related to business connection. What is business connection? Business connection, in order to determine whether the non-resident or whether the company has business connection in India or not, we will discuss about agent concept. Agent concept is what? There are two types of agents, that is independent agents and dependent agents. Independent agents are those agents that work on behalf of in order to consider a agent as independent agent, two conditions need to be satisfied. First one is he should act in the ordinary course of business, and second one is he should not act on wholly or exclusively on behalf of or for the benefit of non-resident. If these two conditions are satisfied, then the agent is considered as independent agent. What are the examples of independent agent? A broker, commission agent, or mercantile agent, or any other delcradar agent, or any other agent, sole agent or any other type of agent will be included in this category. Now we'll go to second category, dependent agent. Dependent agent means an agent who is acting on behalf of non-resident for the benefit of non-resident, wholly or exclusively for the benefit of non-resident, then he is considered as dependent agent. In order to be a dependent agent will involve in following transactions. What are the transactions? He is habitually engaged in maintaining of stock of the non-resident and supplying the stock from there, or he is habitually engaged in concluding of contracts, he is habitually engaged in entering of contracts, he is habitually plays an important role in concluding the contracts, he habitually secures the orders, so he habitually secures the orders, and he habitually concludes the contract. So all these are transactions where if the agent involved in all these transactions, then he is considered as dependent agent. If these transactions happens, then we can say that business connection, the non-resident is having business connection in India. Now he will go to next concept. Next concept is what? Next concept is in respect of when we cannot say that the person is not having business connection in India. There are four transactions where the company will not have any business connection in India. First one is what? First one is the foreign company is engaged in mining of diamonds, unassorted or uncut or unassorted diamonds. Then in that situation, second one is what? Second one is in respect of in respect of when the company is engaged. If the company is engaged. First one is mining of diamonds related business, and if the non-resident has purchased goods for export outside India, in that category, in that situation also, the person will not have any business connection in India. And third one is if the person if the person is solely engaged in if the person is solely engaged or is connected. Remaining two categories we will discuss afterwards. So these are in these categories, so no business connection is established in India. Now it will comes to third category. Third category is what? Third category is as per explanation 3 to section 9 subsection 1 clause 1. What it gives? It gives here the person will be considered as the person is said to have business connection in India. If the person has what? If the person has significant economic presence in India means significant economic presence. What is significant economic presence? In order to determine significant economic presence, explanation 2A to section 9 subsection clause 1 tells like this. There are two transactions involved. First one is purchase and sale of goods or provision of services or collection of data or collection of where the persons residing in India are the customers, where the gross receipts or total turnover exceeds 2 crore rupees in a financial year. In that situation, significant economic presence is located in India. Second one is collection of data from the persons residing in India, or the users are located in India. Users are located in India or exceeding 3 lakh rupees, 3 lakh members. Then we can say that significant economic presence is located in India. Here it is the significant economic presence will be in India whether or not the non-resident is having any branch or residence or any branch office in India, or whether the non-resident is having is located in whether the non-resident is residing in India and doing business in India, whether or not the non-resident have carried out transactions in India or outside India. Significant economic presence is in India. If the significant economic presence is in India, then business connection is established. Then income accrued or arises or deemed to accrue or arises will be taxable. Now will comes to here. There are three transactions that are involved in this. First one is sale or purchase of goods or provision of services. Provision of services from the persons located in India, or from the person who has having internet protocol address, IP address located in India. Second one is collection of data from the persons who are located in India, or from any person who is having internet protocol address located in India. Third one is accessing of data from the persons located in India, or from any person who is having internet protocol address located in India. Then in these three situations, what we say, the person is having significant economic presence in India. If significant economic presence is located in India, then we can say that poem is in India, business connection is in India. Then income accrue or arises or deemed to accrue or arises in India shall be taxable in India. Now we will comes to second category. Second category is if the property or asset or any income source is located in India, then we can say that business connection is in India. And third one is if the transfer of if the income arises from the transfer of capital asset located in India, then also we can say that business connection in India. If these three transactions happens, then income that is accrue or arises in India, deemed to accrue or arises in India will be taxable in the hands of non-resident, even though he is not having even though whether the transaction is carried out in India or outside India, it doesn't matter. If the business connection is established, then the income is taxable. Now we will go to indirect transfer. Indirect transfer is nothing but here the company which is located outside India having substantial amount of stake in the holdings of the Indian company, or the Indian company, and those stake has been sold by the foreign company to another foreign company outside India. Then in that situation also, the income deemed to be accrue or arise in India, and income is taxable. Any income arising from that sale of stake, that income is taxable, because the stake, the value that has been substantially derived from the assets that are located in India. When we can say that value that is substantially derived from the assets that are located in India, when we say that if the total value of the assets, if the total value of the investments are greater than 10 crore rupees of the total investments of the company. And second one is when it has when the investments are more than or equal to 50% of the total investments, total substantial holding of the company, then if these two conditions are satisfied cumulatively, then we can say that income is substantially derived from the assets that are located in India. Then in that situation, the income is taxable. The income that is generated from the sale of the foreign stake of the foreign company to another foreign company will be taxable due to the value has been substantially derived from the assets that are located in India. The famous case is Vodafone case. Vodafone case is a famous case here, and this is entirely related to the concepts of non-resident taxation, and remaining concepts we will discuss afterwards. As the day progresses, we will discuss the remaining concepts. Thank you. Have a nice day. Bye bye.